Good evening to the special program. Global markets are reeling after President Trump's shock announcement of sweeping tariffs, 10% on most nations, 54% on China, 26% on India, sparking the worst one-day plunge since the COVID-19 crisis. The S&P 500 cratered nearly 5% on the 3rd of April, with Europe and Asia following suit as investors braced for a trade war. China has vowed a 34% retaliatory tariff on the United States' goods, while the European Union is preparing countermeasures. Uncertainty reigns. Will this bold move reshape global trade or fracture it? We're going to be looking at expert analysis on this program, but first let's listen in to what Donald Trump had to say.
The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals, as a separate category, and we'll be announcing that sometime in the near future, not too distant future. That's under review right now.
Are you negotiating with partners currently?
What we have is we have a set of tariffs based on what they've been charging us. That's reciprocal. And those tariffs have come in, and every country's called us. That's the beauty of what we do. We put ourselves in the driver's seat. If we would have asked some of these countries, almost most of these countries, to do us a favor, they would have said no. Now they'll do anything for us. But we have tariffs, they've been set, and it's going to make our country very rich.
Well, joining us now, Manish Dangi, founder and CEO of Mosaic Asset Management, and Anup Vadvan, the former Commerce Secretary of India. Mr. Vadvan, let me come to you first. How do Trump's tariffs, which is 10% globally, 54% on China, 26% on India, threaten to push the global economy into a potential recession by disrupting trade flows and raising costs across supply chains? Or is that an exaggeration?
No, certainly, I think they threaten a major slowdown at best, and at worst, a recession. And there are already projections of the US growth rate coming down by a couple of percentage points. So clearly, the impact is going to be cost elevating, recessionary. But the critical thing is the impact will be most pronounced on the US. So the US has put duties across the board on all imports across all countries. So it elevates the cost structure of their economy in a very, very comprehensive way. Almost every American citizen, every American company gets adversely affected. The rest of the world is better placed. Their retaliatory duties will impact only their imports from America, which is 25% of the world economy. But with the rest of the world, they will trade, on saner, normal terms. So the impact is going to be very bad on the US, and I don't think this is going to be sustained for too long. I think President Trump is going to find some face-saving exit route sooner rather than later. And I don't see this lasting, beyond a month at most.
Okay.
The US economy can't take it.
Pramitpal Chaudhary also with us, but Manish Dangi, let me ask you this. What role did the lack of transparency in American methodology for calculating reciprocal tariffs play in triggering the sharp market downturn which we've been seeing over the last 2 days?
I think, it's not the calculation, but, I think the outcome turned out to be worse than even the worst expectations were. So you heard the sort of leaks there from Wall Street Journal that, it's likely to be 10% or thereabouts. The reciprocal tariff and the overall tariff turned out to be sort of much, much higher.
Yes.
And here we are actually, Chief, that we sort of almost in a lose-lose setup. You've seen what China has done today. So in a sense, we've seen this movie before in 1930s and how it led to a sort of a global depression. So Trump is playing by what we all call now Mar-a-Lago Accord, sort of a very, very ideological. I don't think this consensus view there in the market today that nahi karega to they will reverse it very soon. I think he's much more ideological. He's surrounded by people who've sort of put out these views, multiple times in last, many months. I think he'll stick his neck out with these until, it becomes sort of very, very painful for U.S. economy. By the way, U.S. economy is sort of, even today's, employment data suggests is actually doing all right.
Yeah.
My view is that, the smaller economies will be roasted and there's going to be collateral damage everywhere. U.S. too would face, of course, headwinds. But I think they're ready to kind of live with this pain for a while right now.
Mark Cardillo, our chief market economist at Spartan Capital, also with us. But before that, Pramitpal Chaudhary, in your opinion, how effective will China's countermeasures, such as potential currency devaluation or even perhaps rare earth export restrictions, be in offsetting the economic pressure from Trump's tariffs? And could we foresee some sort of a ripple effect on Asia?
Well, a ripple effect, obviously, we'll see that.
Half a second. That question was for Pramitpal. I'll come to you, Peter, in a moment. Pramitpal, go ahead. Yeah.
Oh, sorry. So the critical mineral story that's been something China has been squeezing for a while. And I don't see that necessarily having that much impact. There's actually much more, should we say, stored critical minerals now around the world than there was before because of these type of concerns. The yuan devaluation is actually, in my view, the nuclear bomb here. Because if China decides to go down that path, which so far they've been holding back, that would flood the world with even more cheaper Chinese products than there already are, and would trigger other countries, including countries like India, to raise their tariffs and cause enormous supply chain disruption, because nobody would have to do this on a sort of emergency basis. And I think China has made that very clear repeatedly, privately and otherwise, to the United States, that tariffs, we can hit you back with tariffs, but they know that ultimately that's not necessarily going to hurt the American system as much as they would like. But the global problems that would be caused by yuan devaluation, i.e. a tariff war followed by a currency war, would be extraordinarily great. And keep in mind that the last time that this happened in a limited fashion, in the first Trump administration, emerging economy currencies like the rupee immediately faced sharp devaluations. And that is, in fact, one of the big concerns, I believe, that the finance ministry has here as well.
Peter Cardillo, let's look at Europe briefly. Why has Europe's reaction, including the EU's preparation of countermeasures against Trump's 20% tariff, been so unified? And does this perhaps signal, the future of transatlantic trade relations, with the relationship itself has been soured over the last couple of weeks, particularly after J.D. Vance's remarks at the Munich Security Conference?
Yeah, I think the reason for that is simply that they're trying to put on a united front to, make the U.S. understand that they're going to have a say in this. And, the administration here is quite set in its way, saying that we will prevail. And so I think by using that kind of a tactic that the U.S. will win, we're seeing reactions. We saw it coming out of China today, obviously, and I think we'll see it coming out of the EU and also out of Canada. Canada has been quite firm on its decision so far. So out of the major trading partners so far, we're seeing some stern answer. We're seeing some stern action on their part, and that just simply means that somewhere along the line, someone is going to have to blink first. Otherwise, we're going to face a serious global recession. And, if you look at the financial markets, that's exactly what they are forecasting at this time. Look at the bond market. The 10-year this morning is under 4%. And if this keeps up, we're probably going to wind up to 3.25%.
Yep.
And that signals two things: that the market would expect the Feds to perhaps cut maybe more than 2 or 3 times this year. And the reason for that is not because of inflation finally being put to bed, but because of a recession.
Right.
And so we saw this happen in 2008.
Yes.
And I think, it could very well happen again.
Right. We'll have to wait and see what happens. Mr. Wadhwan, let me come back to you. Could India mitigate the risk of a recession by leveraging, its 26% tariff burden to boost domestic manufacturing, or will higher input costs and perhaps reduced export demand exacerbate the economic strain?
Yeah, so there are a lot of mitigating factors as far as India is concerned. If you see our major competing nations who compete with us to export to the US, they are facing higher tariffs. Bangladesh, for instance, Vietnam, Thailand, Malaysia. So that is a sort of silver lining. And certainly, and to the extent the American economy will not show a supply response, American economy can't overnight start producing all these goods on which they've levied tariff. To that extent, the American consumer, the American corporates will have to depend on imports. And when they look for import choices across the tariff sort of structure, then India will be a favored destination for certain products, given the fact that our tariffs are lower. So, things like textiles, toys, leather goods will have a huge advantage now. And those are things we can produce easily. We have the capacity, we can ramp it up. Even electronics now, a lot of manufacturing is happening in India. We can ramp it up to the extent Vietnam is now facing higher tariffs. So certainly there's a silver lining, but then to really capture the full potential of this, silver lining and these mitigating circumstances, we need to put our domestic house in order, make our, economy a low-cost, business-friendly economy. So all those things have to be done.
Manish Dangi, how could, just to get back on the worries of a recession, how could a sustained market meltdown, as seen with the worst one-day losses since COVID-19, that's something we've just seen, erode consumer and business confidence enough to trigger a self-fulfilling sort of global recession?
So you're absolutely right. The first order impact is through the confidence channel. It's not that you will have relocation of factories from one place to another. It's just that the confidence will be broken because of this. Firstly, the investor confidence in markets, then more importantly, business confidence, because no one today, sort of in right mind, sitting in boardroom, will actually take a big call of actually dialing up risk or setting up new capacities, given what's happening all around us. So I think, that in itself would ensure that whatever little hope that we had of a corporate capex recovery in India or at many other places in the world actually will dial down. Of course, then there comes, because of potential inflation, because, some, prices start to go up, you could have some sort of hurt in terms of consumer confidence. But I'm sort of most worried, and, entire market is most worried that would the corporate capex, generally and more specifically India, would take a little bit of a hit at this point in time. And which is why, markets sort of across the world, including in India, are actually reacting in the manner they are.
Pramit, just for the benefit of viewers watching this program, in a deeply interconnected global economy, where components for products are built across the world, take, for example, iPhones, where batteries come from one part, other components come from other areas, or the Boeing 787 Dreamliner, which has got components from Japan, it's got components from the United States, from Europe, many other parts as well. If there are tariffs, ultimately, isn't America hurting the heart of its own industries and companies?
Definitely. I mean, I think that's the sort of the core MAGA thesis, if you wish, on that America has overly deindustrialized, that it has allowed its financial sector to trigger or cause an overly strong dollar, which has some benefits, but ultimately has been negative for the United States, has some arguments that make some sense. But the manner in which they are trying to rebalance that economy is just absurd. And tariffs is not the way to do this. And as one of the consequences, already, if you look at what's happening with the media reports coming out of the United States, just the steel and aluminum tariffs that they had put in earlier are triggering layoffs in small and medium-sized industries in the United States because America simply does not produce enough steel of different types, especially virgin steel, to offset the loss of the tariffs that are coming on the imports. And as one of the other speakers said, nobody's going to build a steel plant on the basis of this kind of a policy because that's a 5-year program and it's simply no benefit. There's no question or no likelihood that the tariffs will necessarily last that long or be even retained by a future president. So you're not going to get the kind of reindustrialization that they would like on the basis of these policies. And the supply chains that you mentioned are even more complicated. The only mitigating circumstances is that when I've talked to electronic firms of these varieties, they said we have been stocking up on components. So instead of the sort of immediate, the sort of very fast, low inventory model that had been promoted by Japanese firms, now you're looking at companies stocking up 6 months worth of components and so on. So there's a little bit of a leeway, but yes, ultimately this is going to be highly disruptive to the vast swaths of American industry. But I think really the real damage is going to be for the smaller and medium-sized American industrial companies who simply cannot live without parts from Mexico or China or, and let alone steel and aluminum and so on from other parts of the world.
Well, I'd like to thank you all very much for being with us and sharing your thoughts on, it's been a real bloodbath in markets across the world. Is this going to stay? Was this just posturing in a sense, Trump making the point that, look, I've said something and I'm going to do it, or is this going to be long lasting? And if it is, then could there be a real serious recession concern? We'll have to wait and see. Thank you very much for being with us.